Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today here in Europe. I'm Caroline Hepker with Lizzie Burden, and we're joined by Bloomberg reporter Chloe Millay. Chloe, good to speak to you. The start of this week, European defence stocks are getting quite a significant lift, given the concerns around Greenland. How are the likes of BAE Systems and others reacting?
Well, quite positively. It's been, as you mentioned, a really good start to the year for defence stocks, and that is given all the geopolitical tensions that have been happening. And we are starting this week again quite strongly, and this time, as you said, because of Greenland. So a group of European countries, led by Germany and the UK, is discussing plans at the moment for military presence in Greenland, and that would be with the purpose of pushing back against Trump's threats to take over that territory. You know, he said previously that he wasn't ruling out the possibility of military force to do so, and then also to really show that Europe is serious about security in the Arctic region and that they have the situation there under control. Trump insisted on Sunday that the US would own Greenland, saying that acquiring that territory was necessary for national security reasons. So all of that points to growing tensions and growing uncertainty, really, because it is still unclear what Trump is actually planning to do. And that, of course, that uncertainty, that tension is, of course, really beneficial for that defense trade. And we are seeing those defense stocks move higher, and BAE in particular, perhaps because the UK is one of the big drivers behind this plan to put military forces in Greenland.
Okay. Also turning to Barclays, we're looking at it down this morning, Chloe, after Trump's comments on credit card rates. Talk us through that story.
Yeah, so Trump called for a one-year cap on those credit card interest rates at 10% and said that credit card lenders would be in violation of the law if they don't do that. And there's a deadline of January 20th. So Barclays was weaker this morning on the back of that. It has a big US credit card business, and then we can also probably expect US peers like JPMorgan and Citigroup would also be lower today. So the average interest rate is about 20%, which is obviously quite steep for consumers, but banks have argued that reducing those rates would be a threat to profitability for them, because there's, with credit cards, there's no asset to repossess when there's a default, and therefore there's no way to cushion that loss. And their arguments, therefore, is that lower rates might mean that many Americans could actually lose access to credit and therefore be left to payday lenders and loan sharks and whatever. And so this is the argument from banks, but we'll see if Trump keeps pushing this. But in the meantime, we are seeing Barclays react quite negatively to that.
Yeah, again, very interesting sort of intervention into a particular business with sort of instant impact, really. Morgan Stanley also talking about its preference for software over IT services, that having an impact on names here in Europe.
Yeah, so Capgemini in particular is down this morning after Morgan Stanley downgraded a bunch of stocks in the IT sector, IT services sector in particular, saying that the industry will not be seeing any kind of clear rally in 2026. So one of the biggest threats for Capgemini in particular is actually AI, because that comes with what analysts have called disintermediation risks. So essentially a fancy word just to say that the services provided by Capgemini and some of those peers could actually become redundant in the AI era. And in addition to that, the clients of Capgemini are also quite reluctant perhaps at the moment to spend on those IT services because of continued economic uncertainty. This is the only sell rating on that stock, though, on Capgemini, which might mean that this is perhaps quite a contrarian take from Morgan Stanley, and the company might actually end up being in better shape than feared. But we'll see if Morgan Stanley analysts actually end up being proven right. But in the meantime, this downgrade has led to a lot of weakness in that stock.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.